Okay, all right. I'm seeing you. How are you now? How are you, IJ? How are you, IJ? Can you see my screen? Can you see my screen, IJ? Can you see my screen? Can you see my screen? Can you see my screen? Can you see this chat? Can you see it? Okay. All right. So we are good to go now. I'm going on break today, Xmas break. Today, 22nd. So after this class, it will be next year. All right. Or earlier, maybe 30th, if I'm chance. Okay. Okay. So let's go to the shots. Now, I want to teach you. I want to teach you swing points and market structure. All right. You need to know how to mark your swing points. All right, so that you can be able to take trades. All right, very well. So, um, okay, all right. So now let's go to the chart. Your swing points must be marked from the 4 hour time frame. All right, you don't mark it from the 5 minute, 30 minutes. It must start from the 4 hour time frame. All right. So if on the 4 hour price is doing this, all right, on the 4 hour price does this and then breaks this high here. All right, so you mark that is your break of structure now. All right, so that means your swing low is this low here, while your swing high is this high here. So you are only focusing on, you are not actually focusing on this high, you are focusing on this low. This low here is your strong low, where you don't expect price to violate. All right, that is your strong low. Okay, so these are swing points. All right, so this is that is your swing point. So price can come down here. This is what I'm showing you because if you start seeing some kind of internal structures within your swing structure, you are still bullish. All right, you are still bullish. So don't allow swing structures to see up. Know the range that you're trading within. All right. It is now in this swing structure that you cannot be marking your liquidity as price is coming to this your demand. All right. Maybe equal highs and equal lows, maybe fair value gap and all that. All right. Then you can take your trades. So now let me show you something on gold. All right. This is gold. Like I said, gold is bullish. All right. I've been cashing gold. Gold is extremely bullish. All right. I've been tackling gold for a long time. So now, if I go to the 4 hour time frame, all right, I go to the 4 hour time frame, you can see that it is obvious. It is very you know obvious that this is where we had our break of structure. Yeah. All right. On the 4 hour time frame. All right. This is where we had our break of structure here. All right. So that means every other thing inside this range, as price pulls back now, other structure that you are seeing inside this range now are internal structures. You can expect this and then you expect this. All right, on gold. Since I have that, this is my latest break of structure. Okay, I cannot mark out this low here as my swing low. All right. So after I marked that low, and I went to my this 1 hour just to refine that zone. All right. You can see the 1 hour now. It's very very clear that this year I had my break of structure. All right. So this is where I had my break of structure on the 4 hour time frame. All right. So all I'm waiting for is a pullback. All right. All I'm waiting for is a pullback on gold into this area, and then I'll look to buy. But there's something I want you to see here that we have equal lows down here. We have equal lows there. All right. Now, maybe on the 30th, I'll teach you sessions. You have to know when to trade and when not to trade. All right. You don't trade anyhow. I only trade New York and the London session. I'll teach you that. So you can see that we have equal lows here. So invariably, price good can come down here and sweep it before buying. So if I have that in mind, I can decide now that I'll mark out this my latest demand zone here. Alright, you can see we have several equal lows here too. Alright, so maybe that is where price gold may come into, or gold may even come into this fair value gap here down there. Alright, before buying. So you have to put all these things into consideration. Alright, you have to put all these things into consideration before ever you set your buy limit. So for me, for now, this buy limit will not be valid. I have to see gold trade below because of the gold normally takes out equal lows very well. So we have equal lows here. We have a fair value gap. Yeah, all right. So I will expect gold to trade lower, all right, down here before buying. So that means this zone now that I want to buy from, all right, this zone, this last candle here is an area of inducement. All right, it's an area of inducement. So you want to put that into consideration now. All right. So that means I'm to wait. All right. I'm to wait for it. It's either on the 1 hour time frame on the you can take it on any time frame. Or I will not take it here again. Based on what I've seen now, alright? Based on what I've seen, I will not want to buy from this zone again. Let me turn that zone to red. Okay, this zone now for me is a zone of inducement. All I'm waiting for gold is for gold to pull back, all right, pull back, take out that equal low. I would prefer gold coming lower here, and then I can wait for that expansion, right? So now, what you want to do for gold now, you want to wait for gold to come back here and give you a confirmation, all right? A shift in market, so a pullback will do for the buy. You are targeting that high, all right? So for this now, I'll wait for a confirmation on gold. All right. So for now, I do not have anything to do with gold now. All right. I'll wait for that pullback for gold to come there. All right. So I've been talking about swing points. All right. So let's check pairs now. Let me go to okay AUD card. Let's see where we are on AUD card. On the 4 hour time frame, like I said, you want to mark out your swing points. All right. Where is your swing point now on this Euro card? You can see very well that it is clear. All right. That on the 4 hour time frame, this guy is bullish. All right. You can see we had I've already done this low here. It's now your strong low, which is your swing structure. All right. That is your strong low. All right. That price should not violate if that bullish trend will continue. All right. And then we have I don't know why price came in. We have this last candle here, which AED got traded into. All right, you can see it very well now. Traded into. So we are expecting a buy on AED. So now, men knowing that you have your swing low now, if price as price was coming down now, if price now change structure like this, you will not expect a sell on it because to you now this is a shift in market structure. You want price to pull back to an area of so that you can sell. You don't do that. You have already marked your swing low. Since that swing low has not been taken out, you are still bullish. All right, you are still bullish. So that bullishness is still valid. Hear what do you understand? Put it in the comment section. Do you understand what we are saying now? If you understand, just type I understand. If you understand, just type I understand. Just type it. If you understand, just type I understand. Type, oh, I'm waiting for you. If you understand all I've said, just type okay. Alright. You can see that most people now, because they saw that this trend now is a bearish trend, they'll keep expecting this guy to start selling. So they want to sell from here, put their stop loss here, alright, and then they'll be targeting this. By the time they come back, price has stopped there. So you have to understand your swing points, your swing structure. So now on the 30 minute now, on the 30 minute, what are you expecting? Where is this guy targeting that high on the 4 hour time frame for a swing trading? You can hold it. Price is going there. I said this on gold, and price is going to. You can play. You can still pull back. You can still pull back. Keep holding your position because the card is going there. All right. So now on the 30-minute time frame, how can we enter this market? How do we enter? You can see that this zone is too big, but let me just. You can see that as price came back here, yeah, Price had a shift in market structure here. Look at it here. From this and then this. So price close above that. So a pullback will do. But now, this thing I'm saying, market, all right? Market and write it down. You can see that we have equal lows here, all right, which I have marked out, all right. So and below this low, let me change this line to all right. And below this low here, below this low, we have equal lows, all right. We also have equal lows, but now this equal low here, I won't take it because I have extreme zone here, all right, here, and there is a fair value gap there, all right. So all I'm expecting for this gun to do is to come down, pull back, is to come down, all right, is to come down like this and then buy. That is what I'm waiting for. So this move is not my concern. You can see price is creating trend line liquidity, which I talked to you already. All right, all right. You can see it there. So you have to be very very careful now that liquidity is forming. All right, they are forming liquidity. So you expect a pullback. You can even take that sell on the 1 minute, but not now. You can take that sell on the 1 minute, take it down with your full chest down here. Then you can buy. So let's check 1 minute. What is happening there? All right. Let's look at it. Okay, let's look at 3 minutes. On the 3 minute now. mm, On the 3 minute, you can see what has happened there. I think I'll take this trade. You can see there. They pull back. They had a higher low, a lower high. They crashed below that low. So a crash below this low here is a shift in market structure. All right. A crash below that low. Let me use a straight line. All right. Let me use a straight line. So a crash below this low is a shift in market structure, and you can see price has done that on the 3 minutes. All right. We have that closure below that low there. All right. You can see that closure there. So that means so that means card is ready to fall. But where should you be selling from? This sell, I will take it. So, all right. So we have this break of structure here, which automatically has changed the bias to a pullback. So now you want to mark out your swing points here too. You can see this a shift in market structure too. This is a minor shift in market structure. All right. So that's a shift in market structure. Failure swing. Okay. It's a shift in market structure. After that, you're expecting a pullback. All right. You don't want to sell here. All right. You can see that we have lovely trend line liquidity here. All right. We have lovely trend line liquidity here forming very, very well. All right. We have that. I'm taking this trade now. All right. On the 3 minute. So and above it we have our area of interest. This is where I want to sell from. All right. That area. I think I have to set it selling it now. And you can see what price is doing. Price is kind of relatively equal highs. It's being formed here. It's not that equal. That's why I call it relatively equal highs. Okay, all right. I'm taking I'm taking this trade now. My target will be here. I'll target that low. So let me set it. I'm coming. All right. So that will be my entry point. 1 to 3 is okay. So I'm coming. Let me set it now. Let's see. I want to set it. All right. Let me set my sell limit there. So it is that simple. All right. It is that simple. Now for this now, it's your swing. After the change, this high here have been taken out. Price can even take out liquidity above it. I hear what I'm saying. That does not mean that you are now bearish. Let me set myself. I'm coming. If you have any question, type it in the comment section. If you have a question, type it in the comment section. You can, okay. Why we would? The reason why I want to take this is because you can see price. This is now the London session. All right. Asian session has passed. I'll teach you all that as take trades during London session. All right. So let me take it off. Let's see what I can get around $100 here. I'll take it on funded account. Do not sell. All right. You can see very well that here we have a fair value gap. There's a fair value gap there. Hmm? There's a fair value gap between this week and that week there. So you have to be aware that price can pull back here. You have an imbalance there, so your high need to be everywhere. All right. You want to sell from there. You don't want to sell from where prices. Now, because you now know that this high here, this red line is your swing high. You cannot consider this as a shift in market structure. You can't consider this a shift in market structure. All right. You can't consider that a shift in that is inducement. All right. Let me set it on current AUD card. AUD card 7 minutes. So my sell limit will just be at yeah, that will just be on top of that fair value gap, that line. So for just above the high. For 1 to 3 is okay. So my entry point will be around 0.91502. 0.91502. Alright. Then the stop loss just above that high. Stop loss can be there, it's okay. Stop loss can be there. We are expecting a pullback. Do not jump and enter. Alright. 915. Okay, that one. Let me just place it now. 91502. So 1.2 be okay. So let's wait for that pullback. Let's wait for the pullback. Okay, now I'm going to okay, I'm coming. Mm, not done. I'm having network issue. Okay, I'm coming. Let me see my hand very soon, sir. Can you see it now? Can you see my screen now? Can you see my screen now? Can you see my screen now? Okay, so I said that I'm looking for a sell in an overall bullish market. All right. Um, like I said, on the 4 hour time frame, we are looking for that sell because we want to join the trend. All right, have that bullish trend. That's why I said we should sell. All right, we do that with knowledge because already from the 1 hour time frame, we saw that price should pull back. All right, pull back to this area so that we join that trend because we have equal loads here. All right, price just come down here so that we can look for that sell. All right. Mm, so that's what we are doing. All right. On the 3 minute now, we saw another thing. All right. On the 3 minute, we saw that price has shifted structure. Yeah. All right. So after that, this is an inducement. You don't want to sell from there. All right. So we are waiting for price to come here. All right. We are actually expecting price to come back here. So let's set our sell limit. So mine is placed already. So let me set my stop loss. Okay. Okay. Too small. So I'm setting my sell limit now. This my one point. Okay. 9 1 So target to this time. So my sell limit now. So the contract is too much. So let me send you the Let me screenshot it and send it to you how it is. Alright. Okay. Let me send you the so that you can see. Alright. So I've sent it to you. Alright. Can you see it now? That's that's my stop loss. I think I have to tap it and send you what I'm asking. Alright. Alright. So this also losses. So let me send you what I'm risking. Alright. You can see that I'm risking $35 to get 100 and something dollars. That is how it is. It is that simple. Alright. Let me plug my phone. So you can see that it is that simple. Alright. So your duty now is to leave the trade to play out. Alright. Your duty is just to leave it for price to do whatever it wants to do. Alright. You are not expected to touch. Don't tamper with your truth. Alright. So we are expecting a pullback here so that we can sell down. Alright. That's what we are waiting for. Whatever is going on here inside there is not your business. Alright. You want to wait for price to go back there. If price does not go back, no wahala. You you cancel your order. But if price goes back there, it's straight to TP. Alright? It's as simple as that. It's as simple as that. It's as simple as that. Ask me your question. Type your question for me. Or okay, say it on WhatsApp using your voice notes so that that one too is better. Alright? Use your WhatsApp voice note and send me your question. Alright? So that we can continue. Use your WhatsApp and send me a voice note.
Okay, you were supposed to analyze a buy that you took on gold. Was it not 2 days ago that you put it on the group chat? Then you are supposed to analyze the trade that you told me to watch. You're going to help me to analyze that V75 1S. Okay, you were supposed to analyze a buy that you took on gold. Was it not 2 days ago that you put it on the group chat? Then you are supposed to analyze the trade that you told me to watch. You're going to help me to analyze that V75 1S.
It's okay. Let's go to it now. So let's go to it. Let's go to gold. If I go to that 75 1S index, all right. So the buy I took on gold now, you can see gold is taking a pullback. I would have even taken this sell, but I don't know. We are expecting gold to come back to. All right. You can see gold is falling very well. We're expecting gold to come back to. All right. So that buy, it was here. I think it's this trade. I think it's around there. Let me go to the group and see. Let me go to the group. Let me go to the group and see where um okay. Is it now? This is on the 5 minutes. Okay, so let's go there. Okay, I think it's on the 5 minutes. It's around there. Okay, so let's go. All right, it's here. All right, now it's here. I've not even taken this stuff out. Now, um, where do I start from? Okay, you know very well that gold is bullish. All right, gold is bullish. Gold is bullish. So now I met gold somewhere here. All right, it was here I met gold. So I noticed that gold has broken this structure. Yeah. All right, gold has broken this structure here. So I'm expecting gold to pull back. All right, to this area. But now, after this break of structure, we have this our low as our strong low. This low here. All right. Let me take out that. So this is now our strong low. So now the reason why I actually chose this point, all right, was because we have equal lows down here. All right. As price was coming, price came here but did not tap me in. All right. It's a very simple something. Price came here but did not tap me. So I waited for price. All these years I was there, I waited for price. So as price came here now, all right, as price came here, all right, it was around here. We had this equal low here. Okay, we had it was this close here. Okay, see now, it was around here. Those equal lows that I saw here. That I said, okay, gold is going to come down here to take out this low. So I marked out this area, this oak, that candle there, that wick there, as my area of uh, point of interest. All right, yeah, all right. So because of we have equal lows here now, down here, you can see it. That is what you are seeing there. All right. Let me go to. You can see there. It is what you are seeing here. That equal low there. All right. It is equal low that you are seeing that I marked out. After the break of structure, now you can see price played around. I marked this equal low and put out my area of interest or my demand level. That is what you are seeing here. All right, this area here. So I waited for price at first. That's why you have to understand. Most people we want to buy from here. All right, and took them out because we have relative equal lows, very powerful lows there. So I said, okay, this zone now is a zone of in. So I had to mark this area. I set my buy limit stop loss just below that low there. Then targeted 1 to 3, and you can see price played out. So it's a very nice trade. All right, one of my best. You can see price came back here again. All right, to form another relative equal lows for gold. So that's why I'm saying that gold may not respect this zone. It can break it and come down here. All right. So that is the trade that I took on gold. It's not too complicated. All right. Not a complicated trade. It's just knowing your bias, all right, and then knowing where your equal loads are. That's why I keep emphasizing on it, all right. Knowing where your equal loads are very very important. This so that I can join good. So for now, I'll wait. Okay, let's go to volatility 75 1S index. All right, let's see our setup. It's coming up. It's coming up. We are going to wait. We are going to be very patient with it. All right, and try to come back, tap us in, and then start falling. All right, it is that simple. All right. So let's go to volatility 75 1S index. What did I actually tell you from that day? I say you should watch it, right? I asked you to watch it. I said watch it. Stop not responding. No, don't be this WhatsApp. So let's look at volatility 75 1S index. Alright. Don't know why WhatsApp is not responding. WhatsApp is not. So let's see volatility 75 index. Alright, let's see how it goes. That's why it's good to trade one pair because you will know that it's still bullish. Alright. So let's see volatility. Let's wait for it to move. Anyway, WhatsApp is not responding. WhatsApp is not responding. Okay, so let's check it now. You said volatility 75, 75 one is index. What time frame sef did I? You can see it played out. All right, it played out. It played out very well. So I don't know what I'm wasting now. By next year, we'll not be suffering from all this nonsense network. All right, we gotta reconnect. My data is active. So let me listen to what you said.
Okay, you were supposed to analyze a buy that you took on gold. Was it not 2 days ago that you put it on the group chat? Then you are supposed to analyze the trade that you told me to watch. You're going to help me to analyze that V75 1S.
Okay, so this is it here now. All right, we had the break of it. We're expecting that tap before we sell on the what time frame is this? What time frame? It's not even showing the time frame. Let's see. Okay, on the 30-minute time frame. Let's see. Let's see again. Let's see the chart again. Okay, it's still the same thing. Okay, all right, it's still the same thing. You can see that it very well. Remember that we were expecting. I told you that we were expecting that pullback to this side. Price should tap us in. All right, you can see play that very well. Assuming you took it now, you would have made money. All right. I think it was around here that I said we've gotten a shift in structure somewhere here. Okay, it, it was here. It was here. All right, yeah, it was somewhere here. Yeah, it's here. That was where we had our break of structure. You can see, if I compare this to what we had to this, you see the same. You can see that. On the 30-minute time frame, you see the same. I was expecting price to come back here, to come back to somewhere here. You can see there. Let's check it. Yeah, somewhere there up. So automatically price will stop me out. Price will stop me because my SL is just very close there. It was around there, I think so. My SL, no, my SL is somewhere here. I'm targeting. I don't know where I entered from, but price must have stopped me out. Alright, it was somewhere here. Alright, it was somewhere here that we took that trade. Yeah, here we have that relative equal height. I think it's here. This was where we had that relative equal height now. So I expected price to sweep it and start falling. You can see what price did. Price went ahead and stop us out before falling. So that's why sometimes it is good to wait for confirmation. All right. Now, so let's see the 4 hour time frame. Right. On the 4 hour time frame, you can see that we are bearish. Where is our swing structure? This is where we had the break of structure here. So this point should not be taken out. All right. I've taught you that. So on the 1 hour time frame now, just for us to go and refine our entries. All right, just go and refine. So you can see price came all the way here but did not tap. So assuming I knew earlier, I would have marked this area here as my area of interest. All right, or for me not to take this loss now, I would have waited for a confirmation. You can see price came back to this this guy here, that supply area there. All right, price price came back to very nicely. All right, price came back to it. So we are very correct with our bias. Our entry was not confirmed. All right, now how are you supposed to wait for confirmation? You can see as price came here, price crashed below that low now. So after price had this shift in market structure, because you are bearish, all right, because you are bearish. Once you see this, that is a confirmation that price is ready to go. What I did was aggressive entry. All right. Actually, I didn't even enter this trade though. I just sent it to you to check, to just keep you company. I didn't enter it. All right. I didn't enter this trade. So after this change of character, you would have waited for a pullback to this area here. That would have been the nice way to take this guy. All right. That would have been the nice way to sell. The stop loss just above that high. You can even target since price is bearish. All right. You can even target this low here. This low. We have equal lows there. You can even target that low. You just wait for it for price to play out. So if you have any question, all right, put it in the WhatsApp so that I will, you know. Listen to it. Put, put your questions on the WhatsApp. Let me listen to it. Can't see my screen. Hmm? Stop sharing. You said you cannot see my screen. Check it again. Can you see it now? Can you see my screen now? Can you see my screen now? Can you see my screen now? Okay. So now this trade now, like I said, alright. This trade now would have waited for confirmation because I entered aggressive. I didn't actually enter this trade. I just sent it to you for you to keep your company, and you did very well. You can see price tapped this extreme zone here because we have already marked our swing points. Alright, know your swing points. Where price play now. The price now came there, had a shift in market structure here. You can see there. So we're expecting that pullback to continue the trend. This one I can hold it for 1 to 8. This almost 1 to 8 or 1 to 9 weeks to reward. Or you just wait for price to play out on the 1 hour time frame. You can even go to the 30 minutes, alright, and take your entries. I hear what I'm saying. You can go and take your entries there. So put your question in on WhatsApp. Let me see. Ask me a question on WhatsApp. Put it in voice note. Ask me question now. Ask me question. Ask me question now. Sir? Okay.
Please, all the explanation you gave, I didn't see anything, was just your face. When you started explaining V75 oneness, it was only your face I saw. So please, you might have to start from the beginning again because I did not hear anything. I did not see your screen. I did not see what you were explaining at all from the beginning. So, and then please, I want you to analyze V51S. I wish I could talk so that I need to understand swing points very well, and I need to know how to take trades and how to know if my analysis is correct.
All right. Now you said that you didn't see my screen. All right. All right. So let's go over it again. I sent you that you should look at the 75 one less index. All right. Whether it will buy or sell. All right. This is the trade here. All right. This is the trade on the 30 minutes. So I said, watch how this pair moves. Watch how this pair moves based on this analysis. So I'm now explaining to you now that it was here, this 30-minute time frame. All right. This was where we met price here. All right. We have already determined our bias on the 4 hour time frame. So let's check the 4 hour. You mark out your swing point. It's very necessary. Oh. It's very, very important. Hmm. You can see that our recent break of this is the 4 hour time frame is here. All right. This is your break of structure. That is your break. So that high, this high here, this high, as price has not taken it as, so you are still bullish. I mean bearish. All right. That high is your swing point. So you can call that your strong low, your strong high. All right. All right. You can call that your strong high. So you can see price came but did not close above it. So that is a sign that you should sell. Price has gotten to its limit. All right. So now on the 1 hour time frame now, on the 1 hour time frame, you can see that price came to the last step. But now, when I sent you that chart, it was all right. So let me show you what I did on the 30 minutes. All right. You are not taking trades. You are not trading. You are just learning. I don't like it. Oh. You have to learn and take trades. Learn and take trades. All right. Now that chart I sent you, this is where price was. This chart, this was where price was. All right. It was here. I saw this break of structure here. All right. So I sent it to you that expect price to pull back here. All right. It was here that I sent you that expect price to pull back here and then sell. All right. Because it was actually a selling signal that I sent you. You can see there. It was here. This relative equal highs is what we are seeing here now. All right. It was somewhere here. All right. That relative equal high. But now, what I'm saying is, you can see that price actually hit my SL. I did not take the trade though. Targeted somewhere here. And if you look at it, my SL was, let me see. Let me see how my SL is. My SL was very close. Yeah, it was somewhere, just that green candle there. So my SL actually covered this green candle here, and price has hit my SL because it was very tight. Now, why did price hit my SL? Price hit my SL because price has not gotten to the last point. All right, I didn't take it. I'm not showing you. All right, price has not gotten to this last point. That last candle there. You can see that this last point we have our supply area there. All right, this supply area. So that was where price went to, and we have a fair value gap here. So that will give that area a very powerful strength. Where price went to now, you can see now, tapped and indicated this guy. Now, a better way to have entered this trade on the 30 minutes is this. A better way to do it is this. You can see after price mitigated this zone, all right, we would have waited for a confirmation, which is a change of character because we are overall bearish, which we had here. All right, you can see what price did here. From here, we push all the way down to below that low. So we should expect a pullback and then the continuation of that bearish growth trend run. So you can see that this is where we had that change of character. This is very simple. This is where we had it. So after a break, you expect a pullback. So what I'm saying is that this is where I would have entered this trade now. All right. Because very soon I'll be sending you trades and I'll tell you to correct it. Correct where I enter wrongly. That's why I'm showing you all this now. A better way would have been for me to wait for price to get to that last zone, then shift structure, give me a confirmation, pull back, and then I'm entering. You can see how price start now. This, this trade, you can hold it down all the way down here. You have equal lows here. All right, you have your equal lows. So that is your target. Remember, you should be targeting equal lows and equal highs. If you are selling, you are targeting equal lows. If you are buying, you are targeting equal highs. Don't forget that. All right. So now here too, you can see very well we have equal lows here. All right. Hope you are seeing it. This low here and this low makes equal lows. All right. So you can decide to target that low. All right. You can decide to target that low. All right. You expect price to sweep it. All right. You expect price to sweep it. So this can be your TP1 if you want to have your first target and second target. All right. This is your TP1 because price will eat it first because of the equal low we are done. You can make this side your TP2. All right. You can make that side your TP2. All right. So that is this one. Now you can hold it and hold and hold. Leave price, whatever price is doing, let price do. Price can even pull back here and come here. That is not your business. You are still bearish. All right. So that is it. And you said that you want to know to take trades. You are not trading. You are not trading. All right. You are not learning. You are not taking trades. So how do you want to send you the video? Like you can go on and watch it. All right. Let's wait for it to load. So